Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 8th of July, 2023. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of July. And across these major pairs, the Euro and the Aussie dollar was mainly consolidating still within the previous week's range. Whereas the pound sterling, the cable against the US dollar, the pound sterling against US dollar has been more bullish than the other two. And after finding support from a previous resistance and managed to retest the recent highs. So we'll see whether that's going to continue this week. And basically, all three majors have gained against the US dollar on the Friday, especially after the jobs report from the US came out lower than expected. So there was some enthusiasm there at the expense of the US dollar. And yeah, let's take a look at the key drivers for last week. Including the RBA rate decision and the FOMC meeting minutes. And also take a look ahead this coming week as to what's going to be the key fundamental drivers then. All right. Last week was mainly two central banks. One was a rate decision from the RBA and the meeting minutes coming up from the FOMC. And apart from that, there was the key news from the US with the non-farm payroll report. But to start off, the ISM figures for the US for manufacturing and services. Manufacturing has been contracting over the past 8 months, so it's no surprise that it's still not gaining any traction here. Whereas services has been really fueling the economy and came out stronger than expected as well. And on Tuesday, the RBA rate decision was no hike as expected, but indicated that could be further hikes in future months, could be in September. And meeting minutes from the FOMC for last month's meeting was basically almost all the members were voting to hike at a later stage, even after this pause. So it's that's why it's a hawkish pause or skip. So that instill further fears in the market, and US dollar managed to recover somewhat from that. And on Thursday was a surprise as the private sector reported a strong jobs added with almost more than double the forecast figures. So that initially drove the US dollar up and the majors down, but they managed to recover after that. And from that, with the lower than expected jobs added for Friday from the NFP, which was lower than expected, and that markets took advantage and drove all the majors higher and to recover after initially dipping lower in the from the first half of the week. Now, moving ahead to this coming week, we have CPI and PPI data from the US. And CPI forecast is dipping lower, projecting even lower year-on-year figure. The last figure was in June with 4.9%. Sorry, it was it's a typo here. It's 4.0%, and it has been dipping lower since a year ago, from July last year, from the 9%, 9.1%, and has been trending lower. So the market is forecasting even lower levels. So we'll see whether that's will be the case, and follow that up with PPI, which has been also dipping lower. And from the UK, there's jobs data as well as their GDP figure. So we'll see whether their GDP is able to stay above the zero level. Okay, let's watch out for this coming week news with CPI especially. That's the key one from the US. And with some consumer sentiment figures at the end of the week. Let's move back to the analysis. Let's begin with the euro, where it has been dipping lower and finding support again from the daily 55 EMA, and managed to bounce on the Thursday before the NFP data on Friday. So even with the ADP figure, it did not was not able to break down lower and finding support, and also from the previous week's low, but it's still within the range of the previous week. So we'll see if it's able to break out higher and mounting another test of the critical 1.0 round figure. That will be a key resistance level to break. And if we take a look at the weekly time frame, yes, it's basically still constrained within the whole of the previous week's range, and could be some follow through on the bullish side and attempting to break through the 110. If it does, then it may attempt to climb up to 110.69, where the weekly 200 EMA is, but it needs to clear that 110 area. And starting the new month, so previous month could be it could be seen as a bullish move, trying to recover back from the previous month's bearish candle here. So it's still contained within that larger candle. So it could be a piercing line pattern here to see whether it's going to continue to break out higher. So 110 is a critical resistance. Support is still at the 50 fib now, with the daily 55 EMA rising up to provide support, and below that will be the 108. So that could be a key support now at the 108 and the 38 fib retracement. So let's remove this for now. And if it does break higher, then there could be a resistance zone up ahead with these areas here. Okay, so that's in the range of 110.50 to 67, 68 level. And let's see if this will provide an interim support as well. After breaking through that level, let's see whether it'll pull back, find support before continuing its bullish sentiment. Okay. Let's compare this with the US dollar index. And here's the DXY US dollar index, where on Friday with the non-farm payroll report, it has fallen lower right into the support at the 62 FIB retracement, just below 102. And after failing to break out higher above the highs of previous week and could not test the daily 200 EMA. So still constrained under the 103 level. And now it's coming up to the critical support zone. If it does break down lower, then watch out for these previous months low. And then the 786 retracement level. Try to gain some support. Let's take a look on the weekly time frame. And yes, it was rejected at the weekly 55 EMA and strong bearish move down. So sitting right at the 62 FIB retracement, and there is this additional support level. Is breaking below the consolidation triangle, this symmetrical triangle on the daily time frame. And let's see if we take this swing move here. So the support level is at 101.47. It's going to be a critical support zone. And let's move this over to the 50 FIB is now the resistance zone. and it needs to climb back up above the 103 in order to recover. So let's add this as a support level here. Okay. So if it does break down lower, there is still another critical support at the 786 big retracement. So we'll see whether it's going to dip down that far. That could be a reaction at the beginning of the week to retest this trend line break and to confirm that it's a bearish breakdown, and whether it's going to bounce off this support, previous month's low, or it's going to go deeper. Okay. Let's also take a quick look on the monthly time frame. And we'll see if there's how much bearish momentum there is. Similar to the euro, there's a large bullish candle in this case for the month of May, that it could be operating within that range. So it may not, it still has a strong support from that previous month in May, all the way down to the 101. All right, so we'll see whether the CPI and PPI figures will reverse the situation or provide more data to drive the US dollar lower, especially if the CPI comes down lower than expected. Okay, let's move back to the other major pairs. Let's move on to the cable. And the cable is the strongest of these three pairs, and it did test the breakout of this level from the past here, from all the way back in August of 2020. It was a swing low area, and it has been resistance before, and now it's coming up to test. It was tested here a couple of months ago in May. Finally broke out higher, pulled back, and now it's finding support, providing support on Thursday with the ADP figures, and it didn't drop too far. Bounced back and tested the highs of last month. So now let's take a look at the weekly time frame, and looks like it's a morning doji star, very bullish pattern here. On the monthly time frame, it's also pushing up higher towards the, there's a monthly 55 EMA above it. Okay, so let's move this retracement around. And if it continues higher, it's looks like potentially there could be test of 129. For the up will be a critical one at 130 round figure. It's a big round figure here. Let's move this intermediate resistance to the 129. And let's also just test the reversal fib structure here to see, yes, there is a confluence with the 162 fib extension, just 7 pips above the 130. And above the 129, there's a 138 fib extension at 129.46. So let's use this as a reversal setup, and support is at this level at the 38 fib tracement and the support level here now. Let's mark this as an intermediate support, and the swing low is at the major support along with the rising daily 55 EMA. There is also this trend line which should provide support. In case it does dip below this level, there's still a 21 fib retracement. Okay, so from the UK, there's jobs report and a GDP figure, apart from the US CPI and PPI. So let's see whether that will impact the bullish momentum of the cable and all the sterling pairs. All right, let's move on to the Aussie dollar. And after testing the 67 level and at the start of the week with the RBA announcement on Tuesday of just holding rates for this month and potential increase later months. And after that, on Wednesday, Thursday, it fell all the way back to support at 66 before Friday's non-farm pay report, and managed to recover back above the daily 55 EMA and testing the 67 again. So really up and down for the week, but contained within the range of the previous week. So strong support still at 66. Interim resistance still at 67. Major resistance at the 68. And with potentially an intermediate resistance at the daily 200 EMA as well. Let's check the weekly time frame, and that's strong support from the 66 level with a double bottom. similar to the euro, and trying to break out higher above 67. So it needs to break out higher, and you will find resistance coming up at the 38 retracement here. So let's mark another intermediate resistance at the 200. All right, no major news from the Australian economy, so it's basically exposed to US dollar news of the CPI and the PPI. All right. So do check out my other videos with the spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.